gentlemen, we're going to do an entire portfolio performance update along with the dividend stability and what are each one of my individual companies doing and how are they surviving these weird economic situations. On top of that, I got offered to be in a Netflix documentary, but I have to give up my moral fortitude and talk about a stock that I hold. And then I'm going to rate my entire portfolio from 1 to a scale of 10 on how I think it's going to do through these wicked times. So, ladies and gentlemen, I look so forward to breaking this down for you. So let's hop right in.
Drop it.
Welcome back, my passive income investors. I like it. Oh boy, we got a lot to go over. And before we jump into the gusto and the meat of all of this juicy news going on out here, guys, I wanted to update you on my portfolio performance as Scotiabank sent me the March performance, which luckily I'm still outperforming the S&P. And if I can break down my wiggly lines here for you guys, the dotted blue line, the S&P 500, over the last 5 years is only up 29%. Ouch, that is painful to the index holders out there. Taking a look at the black line, the orange, and the blue line representing my iTrade RRSP account. We got my managed account and my TFSA all performing about 20% on average to the upside compared to that S&P. And if we take a look at some of the individual month-over-month performance here, guys, on all of these accounts, that line that represents the S&P is just showing month-over-month whether it was up or whether it was down and where my performance was in between. And we can see now I'm actually performing better to the downside than the S&P 500. But let's just get right into the accounts because I really want to touch base on some of the news and what is going on with the actual integrity of my portfolio. As when we head into recessions, this is where you're really going to find out what is stable, what is risky, and if you have to rebalance. But let's just go through each one of these companies and see and give you my opinion on where I think they're going in the near term, starting with my Canadian banks. We got BNS and Canadian Imperial Bank. I have been listening to some news on this, and luckily, since they were getting a little fearful anyways of people, not paying their loans back, they were doing something called loan loss provision, and there's no way from what I can currently see that these banks are going to be cutting their dividends. What they're going to start doing is using any income they make to essentially start doing share buybacks instead of increasing the dividend from what I've currently been listening to. So over time, I'm still expecting those dividends to roll in. I got them share buybacks set up, and it's going to be neat to see how all of this kind of falls out. I'm confident in these banks and how we're going to get through this. We'll just have to keep an eye on it. Taking a look at my utilities, we'll do both of them here with Northland Power and Southern Company at the bottom, doing some pretty incredible performance and stability through all of this. But could you expect any less from utilities that are pumping out the power to keep the hydro on at them hospitals? They are doing their part, and they're going to be the stabilizers, I think, through this insanity. Taking a look at one of my REITs here, we're talking about RioCan, one of the largest Canadian real estate investment trusts that I've been digging my nails into pretty much for the last month, and I am still going to be buying this stock. I've been buying it in my RRBEC account, and I like looking at it and analyzing it and seeing how it's going to perform through this. But with their top tier tenants, guys, being the banks, being some of these like necessity kind of places like, Loblaws, Shoppers Drug Mart, I cannot foresee them. They might cut the dividend. I could see that happening, but doing a major cut or really just slashing the dividend altogether, unlikely in my personal opinion, but it'll be neat to see where it goes. I think it's at an incredible value here, aside from what all the bears are saying. Now, where the real interest comes in here, guys, is in my drug part of my portfolio, my sin stocks. We're talking about MO. We're talking about British American Tobacco, and they came out of the sidelines this month because British American Tobacco just announced that they are fighting pretty desperately to come up with a cure and manufacture it and even get it out to the public, considering they have the potential manufacturer to produce 1 to 3 million doses of a vaccine per week, and they also have the infrastructure to handle it. What I did not realize, British American Tobacco actually already has a medical part of their company, something that I never even noticed. I think they were working on cures and manufacturing for Ebola. Don't quote me on that. It was one of those major diseases. You'd have to read through some of their homework here. I'm just trying to shine a little bit of light on on this because I think the tobacco industry is going to perform exceptionally well. These are the recession-proof stocks. This is why I loaded the boat on these guys. This is why I'm going to keep buying and doing share buybacks for these buggers with their dividends, because I think we're going to get some pretty good news on these. This could actually, in my opinion, be the turnaround for the tobacco sector. With stuff like this coming into the news, really kind of sucking up to the government in some way. It's kind of like the good and the bad, right? Bats, like, if we're going to be selling tobacco, we might as well be selling the cures to some diseases as well. It's a very moral mixed attitude going on here, but I love it. I think they're going to do great, and I honestly think keep your eyes on them first quarterly earnings, because I think we could see a good rebound. Taking a look at my tech stocks here, guys, Apple and Microsoft, they ain't going to be doing the best for this. Microsoft actually, I think, might perform better than Apple, only because they're really exploding on cloud-based service, and if they can get more involved in cloud, obviously, you're not interacting with anybody, so we could see some good performance out of Microsoft on that aspect of it. Apple, I could see taking a pretty big ding on their first quarterly earnings coming in here, guys, considering their stores are still shut down. They're extending those brick and mortar store shutdowns into the extended month, so it's going to be interesting to see how Apple performs through this. But you're not buying Apple just for the performance. You're buying into that bank account. They got enough money sitting around that if they don't make a dime tomorrow, they could be paying their bills for the next 3 years. So they got nothing to worry about. If you're holding Apple, stay down pat. Don't watch it. If you want to pick up a little bit more, if we see a major dip on these first earnings, I mean, it would probably be a great buying opportunity. Getting into another one of my favorite stocks here, guys, that has been extremely controversial, and I hate looking at it because it is my worst performer. We're talking about GEO Group here, guys, and if you don't know anything about GEO Group, it's a prison stock, made a lot of videos on it, and I got some real interesting news around this one. And if you want to feel a little bit more comfortable if you're holding this, to keep it in mind, the Vanguard Group, Vanguard, they bought a fresh place in GEO Group. Basically, they bought 823,000 shares here, guys, going into the beginning of this year. So they're feeling the pain just as bad as I am if they haven't liquidated their shares. But when Vanguard and all these big institutions are paying attention to this stock, it's the same reason I'm paying attention to it. They're going to have a growing balance sheet. They're still going to be collecting that income through all this instability, because obviously they got tenants that aren't going anywhere. They got a lot of growth looking ahead of themselves, and this is going to be a bit of an annoyance and a headache for these guys, and it's an unfortunate situation, but they have to deal with prisoners getting sick, and they have had prisoners sick. They have been releasing like low criminals just to get them out of the prison system to start mitigating some of this risk, and they're probably going to be getting extra funding from the government for these very reasons. But at the same notion, guys, some interesting news around this. I recently touched base on it. There is someone out there doing a Netflix documentary that actually sent me an email, and I kind of denied them in the beginning because they want to use some of my footage, and I know it is not going to be painting the best light around this company, but I didn't think they were even going to reply to me. I told them I want to see the context you're going to be using my videos in, like what are you going to be paying me, all this different stuff, and I kind of forgot about it. And then I noticed I got an email a few days ago from them. They were offering me a pretty exuberant amount of money to use these clips that they said they really want to use them. So I'm debating on whether should I put my face on battering a stock that I already own to get a decent paycheck in these volatile times, or should I hold my own moral ground and be like, no, you know what, you guys aren't going to paint it in a good picture. And I think whether they use my footage or not, they're still going to be making the documentary. So I'm kind of on the fence. Just like South Park with Tegrity Farms, do I want to hold up my integrity through all of this, guys? Or do I want to sell out, take a fat paycheck while I'm also making money on both ends of this? So unbelievably weird and fascinating stuff that revolves around my life. Before I get into the rest of my stocks, I want to touch base on our sponsor today, ladies and gentlemen, the Chartmaster.com. This is a website me and my buddy Matt put together that has to do with tracking your portfolio. We're not going to charge you monthly fees. We put together these wonderful spreadsheets. We did a day's worth of work into putting these things together. And these things are wonderful because they automatically update your portfolio for you. I'd recommend the Google Sheet if you're primarily just buying US stocks, but this is a really wonderful way to bring all your finances together. Getting into my final account, yes, we're talking about my horrible RRSP where I made a real dumb decision and I overpaid to it. And I'm going to have to fight the government to get some money back, and I'm just waiting on the moment I'm going to pull the plug to pull out about $7,000 from this account. I'm not going to get into that whole discussion. That was the video I did yesterday. You can go check that out. But taking a look here, guys, what is going on with these positions? Talking about Facebook is just like Apple, in my opinion. They might see a bit of a ding on these first quarterly earnings, but because they had so many of these political uprunners spending hundreds of millions and millions of dollars, guys, I can't see Facebook doing that bad overall. Their cash position is phenomenal. And like I said, comparing it to Apple, guys, you're not just buying it for their products, you're also buying it to get into that bank account and those phenomenal margins. And where Facebook sits right now, guys, I have been buying this for a lot of other people, including my girlfriend, at these levels. It is a steal of a deal for the future. And I honestly think Facebook could potentially outperform even Google through the next few years. It's probably the best value in the tech world, and it is probably the best value, in my opinion, on the S&P top 10 compared to Facebook and Apple. If we're talking about valuation versus future potential growth, I really think Facebook is cheap here, and I overpaid for it for sure, but I still love the valuation from where I was buying it. So taking a look now at Johnson & Johnson. This is a company that I'm surprised isn't in the green overall. It's been sitting right around my average buy price, and if you do not own this, get it in your portfolio. I know the dividend's not high, guys, but owning a stock like this is going to stabilize your performance just like owning them utilities. You just want to have it in your portfolio. It is a generational stock. Get it in there, guys. If you don't, go look at the news. Why Johnson & Johnson could beat estimated earnings. You know they're fighting with ventilators and doing everything they can to get these hospitals up and ready for this pending pandemic and the pending future pain that it may cause. So if you don't own these healthcare stocks, I don't like pharmaceutical companies, guys. Not a fan of the pharma world. I do this all the time, but I am a fan of Johnson & Johnson and what they're doing, so you should pick it up. And talking about the pharma world, and speaking of those random emails and the odd things that circulate around my life, I got a call from MindMed today. If you don't know who MindMed is, they're a new company that just IPO'd. I talked about this in the past because Bruce Litton, the old prior CEO of Canopy Growth Corp, got headhunted by this company that even Kevin O'Leary invested into. And essentially this company is trying to get drug approvals for psychoactive substances like LS to the D. I'm trying to say this in a way where YouTube won't flag me, but nonetheless, you know what I'm talking about. You can check them out here, guys. They IPO'd. The stock's trading at around 60 cents. It is a penny stock, and they called me to do a capital funding round because I sent them emails in the past, and I had a really good discussion with the guy. Very fascinating discussion. Talked about my concerns. The problem I have, the primary problem I have with this company is just like every pharmaceutical company, which is getting to the point of sales and getting through those drug trials, and their caveat they keep comparing themselves to is actually Johnson & Johnson, because Johnson & Johnson actually had no problem in getting psychoactive substances approved like ketamine. They actually managed to get a lot of these highly illegal drugs approved for certain medications in people that have depression. So that's what they keep comparing themselves to in hopes that they can get a leg up and actually get through their trials here and get this to the market. So, I mean, I'm on the fence whether I'd buy some or not. It's really cheap. Maybe just spend $100, pick up a bunch of stock and forget about it. But I don't know. I'm always on the fence with these things. Now, the final stock I want to touch base on here for you guys is obviously Tesla. Tesla, my Esla, as financial education likes to say. And this is a stock that is actually performing exceptionally well through the pain that they're experiencing. They just came out with some of their Q1 information, and when the stock actually jumped up, considering they had record deliveries, and this is a company that is the golden child of the stock market. We all know that. This is the best performing stock over last year and where all the eyeballs used to be. And this is a stock that, again, I think is, I'm going to dare to say it, guys, is actually on a discount. We're actually seeing some better valuations in this. The stock is still actually, through these troubling times, they're still showing good numbers on certain aspects of their business. They got so many things going for them. There's even some hidden information about making air conditioning units that'll actually generate clean water. They're way more efficient. There's been a few videos circulating around that. We're still talking about some of the releases of their solar roofs that look phenomenal. I mean, I'm not a financial advisor, but I think you should have just a little tidbit, even if it's just a couple shares, just for that long-term outlook if you are young, because I don't think there is any stock that still has the future potential. If you're looking at growth stocks, that is, that Tesla has, it really sits nicely in my portfolio, in my personal opinion. So at this point in time, guys, I want to do a little bit of a portfolio rating on my stocks, because honestly, considering that I am still relatively outperforming the S&P 500, a lot of my stocks I think are going to be recession-proof and 100% dividend payers through this time. And if I were going to rate this 1 out of 10 on my overall portfolio, putting into consideration that the REITs are probably going to be my worst performers through all of that, but with my sin stocks and everything else that actually has a lot going for it, I'm going to give myself a rating. I'm going to give my rating about a 7.5 to an 8 out of 10, guys. And I'm giving it a little bit of a degraded rating, primarily due to my REITs, but with the dividends and the fact that I don't see any dividend cuts coming, I think I have a well recession-proof setup stock portfolio. And I'd love to know at this point what you guys think about all of this in that description below. This is my overview. I do have to do some updating on my own personal iCloud numbers, giving you guys the overview between the dividends and the portfolio. But I honestly love to know what you think about my own rating on my portfolio and how your portfolio is doing, and any questions you may have, because I love hearing them in that comment section below. And because I got nowhere to go, I have been replying to many of them. But in light of all of this fascinating news, stay cool, stay safe, and have yourself a wonderful Friday.